Okay, hello guys. Today's lesson is gonna be on key levels in trading. And understanding levels is crucial for successful trading, right? As they provide valuable insight into the market dynamics and can help us make informed trading decisions, right? So in this lesson, we will explore the concept of supply and demand, how they relate to key levels. So let's dive in, right? To start, let's gain an understanding of supply and demand in the context of trading. Supply refers to quantity of the financial instrument, like stocks and currencies, that market participants are willing to sell at given price level. And demand, on the other hand, represents a quantity that the market participants are willing to buy at particular price level. Um, the interactions between supply and demand determines the price movement of a financial instrument. So when demand exceeds supply, price tends to rise. When supply exceeds demand, price tends to fall. By analyzing a supply and demand level, we can identify areas on price chart where significant buying or selling pressure may be present. Okay. Um, so one effective ways to identify supply and demand is by locating supply and demand zones on price chart. Supply zones are areas where sellers are expected to be dominant, causing prices to decline. Demand zones, on the other hand, are areas where buyers are expected to be dominant, leading to the price increases. By drawing these zones on the chart, we can visualize areas where significant supply or demand imbalances exist. These zones often act as key levels that influence price movement in the future. And then also, we're gonna talk about supply zones. Supply zones is where you find imbalances, right? So we find a balance area, which is over here, and then the imbalances when it broke down, right? When it broke down this specific area, so we found the imbalance is right at this line right here. This is the area of imbalance when break down, and this becomes a supply zones in the future. But in this scenario, the supply zones are being broken through, right? So we're gonna find somewhere where it's not broken through, right? When the supply zone is very strong. So in this scenario, we find the area of balance, which is right over here, right? Area of balance, just this one right here, and then we broke through, right? When it broke through, this becomes supply zones where the sellers are gonna wait for the price to come back up here for them to enter their selling position or short position, alright? So this is a good example of it, and then this is a good example as well. It doesn't have to be a range, but as long as you locate the range, you can manage to find the supply zone. So in this case, this become the balance area, right? When it comes to balance area, people are waiting, institutions and banks are waiting for the price to come back up before the short order get filled, right? But if you take a look into this deeper, we have a structure over here. A structure over here that's being broken through, retested to the structure, right? Retested to the structure. If you look at it in a smaller time frame, you can actually see the structure. So the structure is right over here. When it comes back to the structure right here, where you can see the big selling point, it stems from this structure. It's gonna come back to the structure again and retest it the supply zones, right? The same thing, we come back to the supply zone and retest it, right? So that's just the basic of supply and demand. So we're gonna need to find the structures, and there you go. Normally you want to locate supply and demand, I mean supplies right on the top after a big buying impulse, right? Just like this one, and then somewhere on the top or previous high, we might see some selling. and then also on the demand zone, it's the same side, right? You want to wait until the price goes really low, right? So in this case, we have a structure like an inverted head and shoulder somewhere right here, right? Where the imbalance happens over here when we see a big buying impulse, right? Big buying impulse started over here, and then we're gonna be waiting for this to come back down. When it comes back to the supply zone where the impulse, where the big buying impulse at, we manage to bounce it up. Alright, the same thing right over here, we managed to bounce it up. So these supply zones are actually real strong. So the bigger the consolidations, the bigger the impulse, the stronger this demand zone is gonna be, right? When the demand zone is strong, you can expect, you can bet your playing on the long side, and you're not gonna be trapped. Right? The same thing. This is the structure. The imbalance starts right here, and then we manage to come back up to the imbalance and get rejected again. Right? So okay. In relation to key level, all right. Support and resistance level are another important aspects of key level, right? So support levels is where the buying pressure tends to be strong enough to prevent the price from falling further, right? So if you see something's flat, they're respecting the line, right? That becomes a support, right? And then when you see the price holding on the top, like this one for example, we have 4171.5 as our support right here. This is gonna be a support, or it touches everything. Like every time it goes to this area, it keeps getting rejected, right? And sometimes you might see a little bit overbuying, but we have another resistance on top right here. Those are the resistance that we need to take a look at, right? So in relations to day trading, right? We want to see where the with supply and demand, we want to see which impulses are the highest, so we can spot where people likes to buy there to enter the position, where the large number of buyers wants to enter that position, right? So in this case, we need to see the behavior of the resistance by looking at the impulse, right? How big is the rejections and how often it is, right? So in this one, we managed to push down the price. This one got an impulse down, and then over here as well we have an impulse down. So pretty much we can conclude every time we touch this level, we have a big push down. Seller loves to short this area, right? Sometimes we manage to break it through. It depends. Sometimes there's a news that likes to push it up, and sometimes there's um, a report, or maybe like an earnings report, something like that. It could bring the price spikes, breaking the resistance, but most of the time like they're gonna bring it back down. Okay, so there are rules on this thing, right? Support and resistance, right? Oh, I forgot to mention the buyers. So the buyers, it's just the opposite, right? We want to look where people are buying, right? So we found one right here. We just look at the impulses, right? So we find one, we find the second one, find the third one, find this one right here, this one as well. All right, and then yeah, I think that's about it. So I'm just gonna give conclusions that buyers love to buy at this area, right? So this impulse, this impulse, this impulse, this impulse, this impulse, this impulse. right? So in this case, like let's say, as I am a trader, right? I'm trading this market, right? So let's say like if we break below this level, I don't want to be bullish. I want to be bearish, right? But at the same time, you have to look at the history, right? So why does it stop right here? Where would be the possible good risk to reward, right? Is it going up or is it going down? So in this case, like over here, if you see in the past, there's a lot of demand zones right here. This is the demand zones. This is the structure that's being broken, right? There's a big imbalance over here, right? So people are waiting for buy orders over here. So in this case, I don't want to be shorting this if it's below this level because the reward is very small, and there's a demand zone as well that is really strong, right? With the big impulses like this, I don't want to be shorting it. All right. Well, in this case, where is the safest place to short? And well, the safest place to short is right on the top. So I'm gonna draw it red. I'm gonna give red color for as in for seller. Okay. So in today's trading, right? So we managed to hold below this line, right? So for seller, like let's say, hey, we got this thing shoot up through, right? The same thing with the concept of supply and demand. Look where the sellers at. The sellers wait over here. There is a break of structure. Playing the call side is not gonna be safe since we see the behavior over here that we keep since we see this is the top resistance, right? And then one more rules: a sudden impulse through the resistance without a consolidation, right, will make this resistance stronger, and there most likely is gonna be uh, the buyer's gonna be taking profits, and they're gonna uh, keep the buying momentum short, as in this big impulses is actually already a big buying momentum. So in this scenario, as a buyer, I would be taking off my position. I would be loading off my risk. So in this case, the logic behind the big impulses without the consolidation to the resistance or to the support is not gonna be long lasting. There's not gonna be a continuation. That's just a fact, right? Unless there's a really big news or catalyst that pushes the price up way above this resistance, right? This one is very shy. Is very shy breaking up above this resistance, right? So something that is not shy breaking down the resistance is um, I think we've seen in the past. Right? I'm gonna look it up later and then I'll take pictures of it. Okay, so in this scenario, we managed to so this is the selling area. So if you're so my plan for today was if it stays below here, creating a bear flag, I would want to be on the short side. So which is what I did. I made it short, targeting this area right here where the buyers likes to buy, which is right over here, right? So I took my profit over here, and there you go. Call it a day, right? Big profit. Okay, so I'm gonna give you more examples. Let's go to Goldman Sachs or something, like something that we never um, really trade before. I mean, something that we never chart before, right? So the first thing you want to do is find the daily levels. I like to use Fibonacci because it makes things faster, right? I'm gonna go to settings, high and low price, because I need that for, okay. And then I'm gonna go to daily, right? Daily time frame to find the highs and the lows, right? And then I want it to be accurate. 26, 16. That's the top. 277.84. Oh, that's the bottom, right? So low of the day, high of the day, and here we are. That's the daily support and resistance. Okay, so I'm just gonna mark it. Okay, so now we're gonna find a range where there's or supply and demand where there's a big selling point, right? So we have a big selling point. Let's say we want to day trade this, right? So we know, I'm just gonna mark where the sellers like to sell. So the sellers love this area to sell, right? And then sellers love to sell at this area level as well. Yep, it's right here, right? So at this current level, right? At this range right here, this is the range we're looking at. And then there is another range. You have to locate it quickly. Where you find something is in a balanced area, there goes up and down. This is a range. This is one range right here, and then there's another range, right? And then where is it? This is the range right here. Then this is one range right here. Oh, this whole thing is a range, right? This whole thing, all right? This whole thing is a range, and we'll find another range on top, another range below it, another range right here, right? Another range, and then another range, right? And then there's a mini range here, right? When you see something, you need to locate the range first so you can find where the seller's area or where the buying area at. So in this case, this range has been broken through, respected. So I'm gonna call this area is a seller area. So I'm just gonna mark it. This is seller. So over here. And then I would like to put it on the right and on the bottom, okay? And then put the text bigger, so that way you don't get caught in the wrong directions, right? Seller is on this level, right? This is the level of sellers. And then now if we look at it deeper, right, where is the buying area, right? So people love to buy over here. We have a big impulses, remember? Selling is where the big impulse is at. So this is the impulse of seller, and then this is the impulse of buyer. But we haven't seen a lot of evidence of buying right on this level. But if we see in the past, we barely have any buyers over here. So in this case, since we don't see any strong impulses or breaking something that breaks the range, if there's a buyer, the buyers will be over here. But the buyers has been stopped out in this case, right? Buyers has been stopped out, and then the real buyers is over here, but the buyers has been stopped out since the break of this range, right? So in this case, the only strong buyers that I can see is when there's a gap impulses. So the real buyers are only waiting over here. I would say on this level. Why I say on this level, right? So we have a big impulses right here, big impulses, right? So we have a gap. This is a big impulse of a gap. This is not a big impulse. So the real buyers are only waiting over here. So in this case, with Goldman Sachs, I'm expecting this thing to be breaking down, as this is a weak buying level. So I'm expecting this to break this range anytime soon, right? Targeting maybe this is my first trimming level since we found a gap, a big buyers over here, right? That act as a demand zones, right? And then if we go below it, then we found the support, right? So at this level, we know evidently there's a strong buyer. right? Big impulses to the upside. But at this level, I'm not too sure of it. We do have a gap, but it's not that convincing as the buyers that is on the bottom right here, right? So in this case, we want to play short, targeting 312, see if we're gonna trim our position, see what's going on over here, and then if it's getting below this level, breaking these demands right here, we're gonna push it down, because this is a really good bear flag to push the price down. All right. And so what are the rules, right? So I'm just gonna discuss about the rules. I'm gonna make a notepad. So key level rules. Find the area of balance and imbalances. Second thing, and then find where the buyers and sellers likes to buy. How do you find that out? With impulses. Alright? And if it's slightly below, if it goes below your expected range, right? If it goes below the range, check the history range before that. Make sure there's no buying area or selling area below or above. Buying is gonna be below, selling is gonna be above, right? And then see if you, let's say if you want to break, if it wants to break the support or the resistance where there is a buy, where there is a significant buyers or sellers, we need a big consolidation, trying to get closer or break through that level itself, right? So for examples, like if you see once you break down, we need to see a lot of higher, lower, higher, low, higher, low, higher, low, higher, low. And then you see the weakness, it breaks down, right? And then so the same thing. Sorry, it's not higher, low, it's lower, high, right? Once it breaks up, we need to see lower high, another low. If you want to see it break high, you're gonna see higher low, higher low, higher low. And then if you want to see breakdowns, it's gonna be lower high, lower high, lower high, lower high. Right? That's how you find the weakness or you find the strength. Alright? And then if the price moves so fast to the resistance line or support line, don't expect continuation. Right? I'm talking about if the price moves so fast to the resistance or support without consolidation. Don't expect continuation. Most likely, it will be rejected, right? And that's what I want you to understand, right? And I think that's enough for this video. One more thing, right? So let's say we managed to find something like this, right? Where this we find an imbalance, breaking down this neckline right here, break down the neckline, and then they manage to push it back up, right? And then suddenly, like, you don't know which side you want to take, right? You want to be a bull or a bear, like, I don't even know, right? Just don't worry about it. Like, let's say this area used to be the buyer's area, right? once it breaks up this level, like we want to see another buyer's area, right? So this is gonna be the buying area. So as long as we are consolidating, going to come back on this support line, there will be a lot of buyers over here on this area, right? There will be a lot of buyers. So don't worry about it too much. And then we keep bouncing up. There's the buyers over here, and then suddenly we break through. We break down. There's no more buyers left. There's only sellers, right? Okay, let's go. I think that's about it for now. And yep, I hope you have a good day.